Welcome to the Real Estate Explainer podcast. I'm your host, Brian Kazula. On today's episode, we have Ron Phillips and Heather Marchant with RP Capital. We're going to be talking about some of the niche markets that they're doing transactions in across the United States. Let's go ahead and jump right into the episode. Hey, Ron, Heather, I just wanted to say thanks for jumping on the podcast today. One of the really cool things that I get to do in my day-to-day world is to talk to real estate investors across the United States. And a lot of the investors that I talk to, it turns out, are your clients. So I really do get to see some of the cool niche markets that you guys are working in. So I figured we'd start it out by just letting the audience know, what do you do? And then if you could really just kind of do a deep dive into some of the niche markets that you're in and why you go into those markets. So I'll let you take it over.
Happy to be here. And we love you guys and what you've been able to do for us personally, but also for our clients. So it's fantastic to be on the show. We basically, in a nutshell, what we do is we help people who want to invest in real estate, but really are either fearful or don't know how. We provide free education for people who want to invest in real estate. And then we take this a step further than that. When I was early on in, 2004, I got stuck with a whole bunch of rental properties. And I realized after getting stuck with those rental properties, because I was in the flipping business, that the rental game's really not that bad of a game. It's kind of fun. Yeah. And I realized,
wait a minute, I'm not stuck.
Yeah, this is actually pretty cool. Then I realized that there's a whole mountain of people in the country who, don't have the teams, they don't have the experience and the know-how, they don't know where to find the deals, and they may live in an area where the cash flows just don't work because the prices are so high. And the rents are they just not going to meet them. And I realized that I had the teams, I had the location, and I had the experience. So why not just amplify what I was doing and help a whole bunch of other people do the same thing? And since 2005, I've been doing that. And Heather has been with me since 2007. So nearly the entire time.
Wow. What market was that originally? Where were you when you got started
City.
Back in 2004 or flipping in 2004?
Kansas City, Missouri. And we're still there.
Yeah. Never stopped.
And it's funny because Heather, if you recall, to answer your second question, Brian, we were also in some high appreciating markets early on because they were appreciating, but they could still cash flow. Then when everything fell apart in 2008, we moved heavily into those markets that were high appreciating and had fallen apart because they turned back into cash flow markets. And
back in 2007, I think, right around that time period, 2004, I was working with a home builder in San Diego. So definitely the market that was going up. And by 2007, definitely the market that was falling apart. So that, high appreciation market. Absolutely.
Yeah. So we move around based on, what the market trends are. Right now, we're in high cash flowing markets in the Midwest that are safe. And, in the event that things fall apart again, whenever that happens, we'll probably move about again a little bit based on what happens in the market.
Yes, I was looking at one of the markets that you guys are in. And, it's one of the reasons why I wanted to have you on the call, because I was talking to Shane about some of the properties that you actively have available. And a market like Kingfisher, Oklahoma, and it's not, you can look at these markets broad-based, just like you could look at any city. But then within the city, there's always these, micro locations. So what is it about the properties in Kingfisher, Oklahoma that drove you to those specific properties?
It's really interesting because Kingfisher is in the metro of Oklahoma City, right? So you have Oklahoma City that's expanding, and Oklahoma City, having visited so many times, it's unique to me that it's pretty sprawling. I mean, most of the homes there are on at least a quarter acre, right? And so you have this big sprawling expansion of the city. And when we were there, we just saw that the city is expanding and kind of swallowing up these smaller towns that have been there for a long time. If you read about Kingfisher, Oklahoma, just in Googling, people are like, oh, super small town, and it's a good family friendly environment or whatever. But the city is growing and swallowing up those smaller towns. And Ron's seen that firsthand with what city was it that you visited that you thought was so far out? I can't remember what city it was in Oklahoma City.
Oh yeah, it was Mustang and
Yes.
Yukon, which are now like they
Part of it.
are in the metro. I mean,
Yep.
when we went out there, they were way out there. But it's not like this only happens in the Midwest.
Yeah.
I mean, if you live in California, here's the thing: like people in California, they've only grown up with this massive metro, and you say LA, and everybody includes inside of LA. They include I just blanked on the one like Culver City and
Sure.
Inglewood and like all these little tiny cities.
Yeah.
And it just LA gobbled them up. They're still the city. They're still there. I mean, you just can't tell when you leave, Culver City and you go to the next city, whatever the next city happens to be. You can't tell.
When I was working with a builder way back when now, that's exactly what we were doing. They were building out in Paris. So beyond Riverside, and we had a lot of clients that were coming in from LA. They'd lived in Corona. They were used to commuting that far into the city already. They knew they could get a better home, a better school district, just a better situation if they're willing to drive another 30 minutes to get to work. And That's what I was looking at when I was specifically looking at Kingfisher, Oklahoma. It's like, all right, well, this is, it's further outside of town, but you've got new homes. So we're talking new homes with less maintenance, a lower price point, and good school districts. Plus, you're starting to see all the shopping, the really key stores that are building up around that area. So while it might be that vision of what is it going to be in 5 years or 10 years, I look back to what Paris was and what Inglewood, was and what it is today. And you're absolutely right. You do see those cities really grow up. And I think the nice thing about it is you end up a lot of times with properties in master plan communities that really have all the amenities that you're looking for, whether it's schools and parks. Not everybody likes to be in a HOA or a PUD, a PUD, but they do have their benefits because they do tend to keep everything nice around you. You don't have your random neighbor painting their door purple, unless you like purple guys. So.
Yeah, it's true. I think I've been in Oklahoma City several times this year and looking at these communities that are needing housing. So you have the city growing in that direction, but you also have these smaller towns that need housing, and they're actually courting builders to come in and build in these smaller communities. And some of them have even gifted land or offered land at a discount that the city owns because they need housing so badly. So not Kingfisher specifically, but several other surrounding cities around Oklahoma City that are commuter cities, really. Because go ahead.
This is also something that right now in the news, we get all these conflicting reports about supply and demand, right? Demand right now is down because interest rates are up. But that's an artificial drop of demand. The demand is actually still there. There is a need for housing. And there's a need specifically for affordable housing. And especially because the interest rates have gone up.
Yeah.
And that's what these cities, these little towns, they're begging for builders to come in and build affordable housing. The dirty little secret in the building community, however, is that it's almost impossible to profitably build housing that's affordable. There's no money in it right now. And especially where the interest rates are so high. I was just talking to a builder friend of mine who builds in Memphis. And right now, they're developing lots for $65,000 lots, right? My buddy had
Right.
some
So
lots
that's a higher end lot. I mean, depending on where you're at. So $65,000 for an affordable housing. I mean,
that doesn't work.
It doesn't work.
It doesn't work. But you can't, they can't get land inexpensively enough for the infrastructure. And once you put the infrastructure, there's a hard cost to the infrastructure. And I think people just misunderstand that the dirt cost is also really high right now. And then on top of that, you have the building costs that haven't gone down a ton. I mean, right now you're able to beat up the subs maybe just a little bit, but not that much. Hard cost on a house without profit, without soft costs, already puts the house out of affordable home range.
So I think that kind of dives a little bit deeper too, because when you're talking about building out the infrastructure, a lot of times the builders are forced to bake that into the CDDs. So you're going to have an increased tax base sometimes in these newer communities because you've got to put in the roads, you have to put in the sewer. Yep. And so that the house might be priced affordably, but then you look at your property taxes and all of a sudden they're going to be a little bit higher. So that's something to definitely look at. I'd like to thank today's sponsor, U.S. Tax Advisors Group, a cost segregation company. If you're interested in learning more about cost segregation, log on to realestateexplainer.com and click the cost segregation button on the top of the page. So we've just talked about the new home communities that you guys offer. If we had one of those pins in Google Earth, we could just drop it and kind of pick it up, take it from like Kingfisher, Oklahoma, and then maybe move it over to another one of your communities or areas that you're selling in, which are not new homes, but let's say Birmingham, Alabama, for example, where you're working with rehabs, builders or contractors that are rehabbing older properties, and you're still creating those affordable homes in those areas. So when you're talking to investors, can you kind of talk a little bit about the two properties, the new homes in Kingfisher, Oklahoma versus those rehab properties in Birmingham, Alabama? Some of the pros and cons.
Yeah, I let's take a step back too and look at our criteria probably, because that might be helpful context. So what we're looking for is first some job growth, some healthy, stable economy, right? With some commercial development, population growth. We're looking for affordability. We want it to be in an affordable price range that takes out several markets in the country that are just not affordable. We want landlord-friendly legislation, which also takes out a lot of places in the country. I mean, California, the whole state is out with a landlord legislation that's landlord friendly. So if you are looking at the whole United States, you just start knocking off options, and then you start zeroing in right on. Okay, so we're looking for places that have job growth and that there's demand for rentals. Right, good property management in place, that you have good schools, shopping, healthcare, all of the things that, where people want to live, right? And so when you get into those, like that bird's eye view, and then you start zeroing in on, okay, here's some markets that work. So Birmingham, Alabama, definitely affordable, right? The economy's been growing there. We have good property management there. Like we start zeroing in. So comparing the two, new construction versus renovated properties, typically your renovated properties are going to have a higher rate of return because they kind of have to compete with something brand new, right? It's like a brand new car versus a used car. People are going to want to buy the brand new car if it's going to be the same price. Why in the world would you buy a used car if it's the same price as a brand new car? So having some additional cash flow per dollar spent is really a big incentive with those renovated properties. It's a good entry level point if you're a brand new investor. That's how I started, was a renovated property, because it was a little intimidating to put more money down as a down payment. My first property, yes.
Yeah, was it Fayetteville? Yep,
Yes.
I remember. We did a project for you guys up there a
Oh,
couple of
yeah.
years ago, and we were talking about it. Yeah.
That's right.
Yeah,
Oh,
pretty
it's wigging me
interesting.
out.
Yep.
I'm like, yes. How did you know
Yeah.
that? Yes.
Stalker. Brian is a stalker.
Yeah, exactly. No, good memory. That's what it is.
Awesome
So
Well,
yeah,
memory, man.
absolutely.
Yeah.
And
My
you know, one of
second
the cool
property was
things.
Birmingham, though, is what I was going to say. Yeah. Go ahead.
Okay, Birmingham. So the cool thing about you know, again, what you guys do in helping investors buying these niche markets across the United States. So you maybe have a new home community with a lower ROI. You're not going to make as much monthly. And you're taking also that same principle and you're applying it to the used or resale market in, let's say, Birmingham, Alabama. But then you're working with builders that you know, like, and trust, property managers that you know, like, and trust. And you're seeing a little bit higher ROI on those properties. And it blows my mind because you can get into a property in Alabama for under $200,000. So you
Yeah.
can get in under $200,000. Your rates might be a little bit higher, but you're still penciling those with your pro formas. And I think that that's such a cool thing because you don't have to start out with a $500,000 investment property. All of a sudden, you can buy, you know, $180,000 investment property, $150,000 investment property that has a return on investment with today's interest rates, which means that when things come back down in the future, you can refinance out of them. Now, to segue again, what I wanted to talk about next was when you're looking at these communities and you're looking at the different investment types. I've listened to the Get Real podcast that you host, several episodes, and you really are good about explaining the different types of properties, the A, B, C, and D type properties. Now, I'd imagine that, well, I'm not going to imagine. I'll just ask. Tell me about the different types of properties.
Okay, don't buy D class properties.
So we're not starting backwards. D is not
We're
the
going to
best
go
in this
back.
scenario.
We're going to go backwards because you know one of the things that there are a lot of companies out there that pitch D class properties because on paper they look really, really attractive.
Super
very,
attractive.
very low price point,
Yeah.
high potential cash on cash return. And if you walk down the street, you may or may not get shot. So
all right, sounds pretty bad. Don't want to have that.
That's where so it looks good on paper, cute little bungalow house. And if you don't know what you're doing, you can potentially, I mean, we talk to people all the time who unfortunately have bought these and they call us and they're like, hey, can you help me unload these? No, we can't actually. We can maybe get you to a realtor locally who can try to help you unload them. But the reality of the situation is that those properties don't appreciate and they have incredibly high turnover. You do not want those houses. Okay. So let's focus on A, B, and C. A is what we were just talking about. New construction, new areas, new master plan communities, new. It's like, you know, it's where everybody wants to live. It's the greatest thing. A property in an A area, they typically have lower cash on cash returns because the prices are higher, et cetera. But the reason a lot of people like them, at least our clients, is because they're busy and they just don't have very many problems. Like you said earlier, Brian, they don't have a whole lot of maintenance problems. Typically, your tenants who are living in there, the residents, they are a little higher because they're paying higher rates to get in there. They have more stable jobs. They just don't have as many turnover problems. Just in general, the risk associated with owning a rental property are mitigated in that. Because of that, you get a little bit lower cash on cash return.
Got it. So lower cash on cash return. Would you say in those areas you may get higher appreciation over time? So over the long run, you're getting paid that way instead of the monthly rents?
and probably faster as well.
Yeah.
Right.
And I will add too, with my new construction versus renovated in my portfolio, one of the biggest differences I've seen is my tenants stay longer. So you have less tenant turn cost, which is real cost, and less vacancy time. Most of my tenants in new construction just stay for like the whole time I own the property. Like has been common for me. I'm like knocking on wood over here. I want it to stay common, but and they take care of it as if they owned it. I mean, my tenant that lived in my Oklahoma house for 3 years, moved out, and I had an agent go in to get it listed on the MLS. And he said it didn't even need the carpets cleaned. I mean, it was
That's
in
awesome.
immaculate
Yeah.
condition. So I'm just putting that out
I mean,
there.
I should say that typically doesn't happen. So
I know. But
Heather
hey,
really hit
look,
the lottery on that particular resident in her house. So just understand that you typically have to clean the carpets, folks. So,
I know.
but new construction just has less problems, and that's why a lot of people like them. So, maybe just to use some numbers, maybe you're at a 7 or an 8% cash on cash return on a new construction, which is still incredible, instead of a 12% return on an older, like a B class or C class property. They're willing to give up for, because they just don't want the phone calls and they don't want to deal with it. And then we have other clients who are like, yeah, actually I'm buying this because I need more cash flow. And if you need more cash flow, then, well, more cash flow is a B class and C class. B class is just a little bit older. They're still really nice houses, but they're just a little bit less expensive. And then C class.
So it depends on your requirement as an investor, what you need. You're saying if you're looking for that brand new property, you're not going to get the return, the cash on cash return today on the rents. But if you're okay holding on for a little bit longer, you're going to reap the appreciation possibly in that property, and rents will definitely increase over time. If you are looking to supplement your income today, you're moving out of a job and you're looking to buy real estate specifically to generate income, then the B and C properties might be the best opportunity for you. Is that fair to say?
I think it depends. And I love a combination personally. I love a combination of the two, because you get the advantages of the A class and you get the advantages of the B class, and combined, your cash on cash is higher. I'm a big fan of that.
All right.
Yeah.
Makes sense.
Mitigating risk through buying multiple different, and I think in multiple different areas too.
Yeah.
The cool thing about and we're in what, 10 areas right now, Heather, somewhere around there, give or take one. The cool thing is that you can have a diversified portfolio inside of real estate. Everybody thinks you have to have a diversified portfolio with money all over the place and a whole bunch of different things. Well, real estate, the returns, remember there's 4 different returns. We're talking about cash on cash return and appreciation, but you also have somebody paying down your mortgage, right? So you have a principal reduction that's happening all the time, every single month. And then you have tax incentives. So you have all 4 of those. And when you combine all 4 of those, even if you're starting with a 7 or an 8% return, over time, you're getting a pretty solid double-digit return, and you can diversify that via asset class, and you can diversify that via area and city. And each one of those areas and each one of those asset classes has different unique pros and cons, which is why we meet with everybody individually and try to figure out, what's going to be best by going over all the stuff we're talking about. Brian, what's the pros and cons of these different ones? We can also talk about single family versus duplex and fourplex, right? Because there's pros and cons to both of those types of properties. And then inside of each one of those, there's A, B, and C. Yeah. And there's multiple areas, right? So
interesting.
There's this plethora, smorgasbord of investments out there that most people don't even realize are available. And they are.
And pretty easily. I mean, we have the thing that I think helps our clients be able to take this on and try this out, and when they haven't maybe bought out of state properties before, in a lot of ways, is having a company that looks at the properties, finds the builders and rehabbers. We do a lot of rinse and repeat. A lot of our sellers are long-term sellers. We do not own the property that we sell. That's usually something people assume in hearing like what we do, that we're selling property we built, and that is not the case. As well, we don't manage them after closing. We have property managers locally that we interview and recommend. We try to keep our ear to the ground long term and help clients if they need to switch management companies or whatever in the future. Having someone on your team that can help walk you through that and help you put your team in place locally so that you can be successful is probably something that holds most people back. most people that call us say, man, I've always wanted to do this. My dad, like my grandpa, they did real estate and they were super successful and I've wanted to do this. But, there's always that but. And it's usually, I just don't know enough or I don't have the team in place. Like I would need a property manager. And
or
so
I've
I
got
feel
to
like
put
that
60% down to make a cash flow in my backyard, which is where everybody tells me I need to invest in my backyard. And, there's so many different things that cause people fear and cause them to hesitate about moving forward with something that legitimately we've seen thousands of people it alter their lives, both of us included.
Yeah.
It's
sure.
it's pretty special.
And that was going to be the last topic, and you guys really nailed it. Is overcoming the fear associated with investing in property that's outside of your market, meaning not in your backyard. And that's absolutely you nailed it. I mean, Heather just went over it as far as it's having that team in place that can take care of the hot water heater that failed and you have to get taken care of on a Saturday. You're not having to call a plumber. You're calling the property manager that your team has vetted, and really taking away, that pain point. You have that team in place that can really take care of all those, issues that you'd normally have. It's the same thing. Like if you were to say, okay, I want to invest in the United States, and you throw a dart at the map. I think sometimes that's how people are selecting the areas that they're investing in. What you guys have done is you've brought it together where you've identified these niche markets across the United States. Then you've built a team in those markets that can help your investors be successful in real estate investing. And you've just created this package that works so well. And I can say firsthand that I've worked with your clients for the last, 3+ years now, and they buy properties every single year. They'll buy one, the next year, maybe they'll buy two, maybe they'll move up from single family and they'll buy a small apartment complex. So it's really neat to see what you've done firsthand. And it really, that's why I wanted to have you on the podcast today. And I think, we could probably wrap it up right there, but I do want, people just to have a real good, way to get in touch with you. Certainly they can hop onto the Get Real podcast. What is the best way for clients to reach out to you if they are looking to invest in real estate in niche markets across the United States that do generate, a positive return on investment month after month?
Yeah. Well, I would say a couple other things that I would add that are important to us. And Ron mentioned it a little bit, is that wealth plan. Meeting with people and going through and understanding what's important to the individual about owning real estate has been really a game changer for our clients and for us in being able to help them. So we prefer to set up that free consultation with potential clients so that they can have a better handle and a better idea and understanding as to what real estate can do for them specifically. So to set that up, you can email us at invest@rpcinvest.com is probably the easiest way to reach us. But our podcast is getrealestatesuccess.com. You can go on there and we have so many episodes. I feel like I'm 100 years old, but we have like over 200 episodes and they are, you can search them. You can search like by keywords and content. So if you have questions specific to a topic in owning rental properties, I feel like we've covered just about everything. Ron and
I can't imagine we haven't covered it
I know.
on the show.
We
Both
have
the
our
positives
time.
and the negatives. I'm
Yes.
certain that we've covered them. So feel free to, we'd love to have more people obviously listen, but also learn. Like you said, Brian, people buy over and over. It is the healthiest addiction other than the gym that you can do for yourself. I suggest you do both and you do them on a regular repeat. Real estate has changed my and my family's life for generations, and it can do the same for everybody who's listening. It's just it's the most amazing thing for wealth building that I've seen.
Yeah,
That's
agree.
awesome. Thank you guys. Thank you for being on the podcast today.
Appreciate it. Thanks for the invite.
If you'd like to get connected with today's guest, log on to realestateexplainer.com and click the Get Connected button on the homepage.